Welcome back. Today, we're doing a deep dive into a crypto platform called Vault27.net. They're making some pretty, well, eye-catching claims.
Right.
Trading, investing, standard stuff. But the big hook, staking rewards. They're talking about 8% passive returns monthly.
Yeah, that 8%, it definitely gets your attention. And that's exactly why we're digging into this today, especially for you if you're trying to learn about these things. We've looked closely at an analysis of Vault27.net, trying to figure out, is this a real service or is it, like the analysis suggests, potentially an MLM Ponzi scheme? We're going to walk you through 5 critical red flags, things you really need to watch out for.
Okay, let's get into it. First big concern, transparency, or, well, the lack of it. Who's actually running Vault27.net? They name a founder and CEO, Bruce John Kernick. But here's the proof. The analysis we reviewed couldn't find much independent detail on the management team. That feels odd for a serious platform.
It is odd, very odd, because legitimate exchanges, they usually have leadership you can verify. LinkedIn profiles, maybe conference appearances, history. When you see a name like Bruce John Kernick pop up, but there's no real professional footprint backing it up, sometimes, and the analysis points this way, it might be a recycled name, maybe from other failed ventures or even scams. It gives this sort of illusion of legitimacy, but with zero accountability.
Right. A ghost CEO.
Yeah.
And if the leadership is hazy, what about the business itself? What are they actually selling? That's the second flag, isn't it? The lack of, like, a real product. We try to find the core service, the exchange features, the tools.
What did the analysis find promoters are actually pushing?
Mostly just the membership, getting other people to sign up.
Exactly. The focus isn't on using a trading platform or some unique tech. It's all about recruitment. That's a classic sign. If the main way money is made is by bringing in new members, not by delivering actual value or a product, well, that's a huge red flag for MLM or Ponzi schemes.
Yeah. Okay, recruitment focus. But let's circle back to that huge promise. 8% monthly passive returns.
Sure.
That's astronomical. I mean, crypto's volatile. Maybe some expert traders hit big wins sometimes. Why is the analysis so sure this promise is a scam indicator?
Well, it's the passive and consistent part. They advertise this 8% return like clockwork every month on investments all the way up to $1 million USDT. No real trading operation, no matter how good, can guarantee that kind of return without taking on absolutely massive, potentially catastrophic risk, especially not passively. And crucially, where are the audited financial reports to back this up? They don't provide them. So the analysis concludes pretty strongly that it's not coming from trading profits. It's almost certainly funded by new money coming in from later investors paying off the earlier ones.
Okay, so it's just shifting money around until it collapses.
That's the model, yeah. It's basically a ticking clock.
Which leads to the legal side. If the financials don't add up, what about regulations? The analysis highlighted major issues with compliance. Kernick supposedly is based in the UK, right? But Vault27.net isn't registered with any financial authorities there.
That's right. Specifically, to offer the kinds of financial services they claim to, they'd absolutely need to be registered with the UK's Financial Conduct Authority, the FCA. Operating without that FCA registration isn't just, forgetting some paperwork. It's illegal. It strongly suggests they're deliberately avoiding regulatory oversight, avoiding the very systems designed to check for things like money laundering or, well, running a scheme.
And that avoidance, it connects directly to the last big red flag, the KYC policy, know your customer. Vault27 apparently boasts about having soft KYC. Minimal ID checks, no reporting across borders. Sounds easy for users maybe, but why is that actually a huge risk?
Because those KYC rules exist for a reason. They're there to prevent criminals from using financial platforms to launder money or finance illegal activities. When a platform advertises minimal checks, it's basically putting up a big sign saying, hey, illicit funds welcome here. So for you, the legitimate user thinking of investing, the risk is huge. You're putting your money into an environment that's potentially enabling crime. That could attract serious scrutiny later on, maybe legal issues, tax problems. It's just not worth it.
Okay, so let's put it all together. We've got unclear, maybe fake leadership, no real product, just recruitment, wildly unsustainable return promises, operating outside the law, no FCA registration, and then risky, minimal identity checks. When you look at all 5 points, the picture the analysis paints is pretty clear, isn't it?
Yeah, it points very strongly towards a classic MLM Ponzi setup, high risk written all over it. And the bottom line, the key takeaway for you, is that these things inevitably collapse. Once recruitment slows down, and it always does, the money dries up. The platform disappears, often overnight, and the chance of getting your initial investment back, extremely low.
So here's something to think about. If an opportunity promises the moon, Huge passive returns, super easy sign up, no checks, no regulation friction. Ask yourself, why is there no friction? Often that friction, those rules, they're there to protect you. Be critical. Where is that money really coming from? Something to chew on. That's all we have time for on this deep dive.